every market crash brings different opportunities. And usually there's new market leaders. When we think about the dot-com bubble, who became the market leaders? It's going to be Apple, Microsoft, Google. And so I pulled a question on what stocks you guys want me to dive into, and man, you guys answered the bell. So we're going to just go through a few of these, as I do have some of these done. They might not be completely up to date, but so Intel actually won the vote, but there was a decent amount of call outs underneath that I actually have done. So we're going to review those first, and then we'll dig into Intel. So Palantir and SOFI I have done. So with Palantir, I get about a $5.25 price target. Along with that, there was in the last quarterly report, I noticed that margins were actually shrinking, not expanding. So these were some problems that I brought up. So I ended up getting between a $5.25 to roughly a $6 price target on Palantir. And there is risk involved with those price targets, guys. I want you to understand this is not a blue chip company that you can kind of just go to bed, that pays a dividend and has a clean balance sheet and is buying back stock. That's just not the case. This is a company that's in the growth phase. It's issuing a lot of shares. And so those are the two main concerns that I have. Can they maintain specific growth rates? Can they maintain margins? Can they maintain margins, and can they slow down on the stock-based compensation and diluting shareholders? So that would be the risk with a company like Palantir. So once again, guys, $5.25 price target and $5.25 price target up to $6 I can kind of get behind possibly. Where is the stock trading today? And the stock today is sitting at $6.45 up on the day. So I want people to understand when we do these valuations, we usually do them around the earnings. So when earnings come back out, we reevaluate the stock, we'll update it, and I'll have to put dates. I guess I'll have to put dates in there to remind myself. I could definitely lose track on where the stock is just because I'm evaluating a lot of different stocks and you forget where your price targets are. So as earnings come out, the company updates where exactly they're on track. We get analyst expectations of growth rates. We can project out the next quarter what they're possibly going to be doing, looking forward the next 5 to 10 years. So on some of these, they might not be updated, but I believe Palantir is, and I believe SOFI is, so that's why we're going to show those. Guys, next one up is SOFI. This one I had about a $4.70 to a $5 price target. There's a lot of insider buy. Anthony Noto is buying a lot of inside shares, tons of inside shares. He is not holding back here, and that is telling me that maybe there's a possibility that they positive EPS here soon. I could be wrong, but seems to be that that's what they're on track for, and it seems to be that the aggression buying at these lows makes sense that there's some brighter days ahead for possibly SOFI here. Once they report quarterly earnings, we will update this one as well. But this has been my price target, guys, for a significant amount of time here. Probably over the last 4 to 6 months is about a $4 to $5 price target is what I've had on SOFI. SOFI did hit $4.25, currently trading at $4.63. So I do find it interesting at these levels. Obviously, we'd like to get it probably closer to $4.40 or $4.40 or $4.50 as this spike off of Anthony Noto buying stocks. I would probably wait. Next up is going to be PayPal. Once again, have to wait for the quarterly report on PayPal to update these numbers. But for me, guys, from a true DCF model, I can see PayPal being pretty close to a buy from a $50 to $60 price target here. When we run an EV to EBITDA multiplier here, we get a $50 price target. So I'm going to be right in the middle here at $55 a share for PayPal. This is one that I'm kind of interested in. Now, I will say that this is kind of a race to a bottom. Competition's picking up. It's a lot like the streaming wars, in my opinion, where the competition's starting to pick up here, and it's all about who's getting the best deal. And so for PayPal, guys, I think it's getting pretty darn close to a buy, in my opinion. $55 is where I definitely become interested in the stock. Now, this is without updating the financials. And always do your due diligence before buying stocks, guys. This is not financial advice. Currently, stock is sitting right around $69, $70. I basically would be interested on a 10 to 12% dip here. So is that feasible? I think so. There's definitely an opportunity for it to break recent lows, kind of have a panic selling moment. And at that point in time, I think when the stock starts bottoming out, it becomes very, very interesting. Reason why I have a low valuation on PayPal is the company is starting to become more mature. It has a 35 PE ratio, which is substantially higher than the market. So I still would pay an above premium market multiple for the stock. But at this point in time, I think $55 to $60 tops makes a lot of sense, which means it doesn't need to really come down much more for it to be considered a buy, in my opinion. Once again, this is all information waiting on earnings and seeing what forecasts are. And if the company has more opportunity to grow that I'm not calculating here, then I have to factor that in, and it completely changes the outcome of the valuation of the company. So we had Home Depot and Lowe's. I definitely have to dig into them. I haven't really done a lot of research and analysis on the home builders overall. Yes, I agree with this statement that the home builders are probably a little bit more insulated, but I would also be concerned that spending is going to slow next year. So I could see the home builders kind of taking a hit next year. This is just my thesis. As I think people are going to be very concerned with spending next year. Yes, home maintenance is important, but it also could be put off, right? For the most part, if it's not anything major. Roy or uranium is definitely one I have to dig into. I know dark matter. I know you've dropped this one off before, and I just haven't gotten around to it. Definitely have to get into that one, so I will try to get to that one. United Pacific, it was pretty mixed, but overall, it was definitely Intel. Before we get into Intel, I compare Intel, Meta, and Disney as kind of dead money over the next possibly 8 to 10 months here. As we go into 2023, I think there's a lot of unclarity on what's going to happen with the consumer, and I think there's a lot of unclarity what's going on with technology and Meta in general. So these all kind of fall in a similar bucket to where I don't think you need to rush to these stocks. I don't think there's going to be any sort of massive catalyst that sends these stocks on a huge run. We know that Meta's starting to lay people off. We know that they also have some political tension taking place as of today. And so that's one that it's probably going to have some more and more things to kind of overcome in the near future. And once again, I don't think with the market backdrop, you need to rush this one, as I think the market sentiment's pretty negative overall, which is going to drive naturally valuations down probably a little bit lower here. I could be wrong, but that's just an opinion. With Disney, it's a similar situation, right? They're kind of transitioning here. If it wasn't for the parks, Disney's earnings would be absolutely atrocious. And we have new management coming in here, and there's a lot of things that Disney's trying to do, whether that's sell off assets or really change the business and make internal changes that are going to take some time. So Disney, Meta, and then once again, Intel was the big one, and CapEx on Intel is going to be the question mark. A, they're losing market share. B, CapEx is going to be inflated. And C, the consumer is slowing down. Multiple headwinds here for Intel. But with that being said, that lends a buying opportunity, much like it does for Disney and Meta, that people that want to step in, take on the risk. And the market is most likely going to misprice these three stocks, as sentiment is pretty low here, and they're probably not going to be as bad as people thought. We always think the worst of things, and that's how we get these market sell-offs, and that's why it's important to run valuations, because you do get price disconnections. So a couple things before we get into Intel. First and foremost, guys, the PE ratio looks very, very low here. That's a trailing 12-month. We obviously know the consumer is going to slow down, so the E side of this ratio is really going to be in question next year, and that's why I tend to caution you all to not just jump on low PE ratios and the fact that it's paying a nice dividend. Okay, the dividend could absolutely cut back considering CapEx that needs to come out of the company. A significant decline that's coming for most analysts are seeing a pretty significant decline coming, and that's why we're seeing the stock price get absolutely hammered here, as the market is a forward-looking mechanism, and a lot of analysts are coming out and obviously taking market share away from Intel. We could see them doing $79 billion in 2021, projection definitely coming down. I think they're going to do right around $68 billion or $69 billion. That's what it is in the trailing 12 months. And then going down to 62, back up to 65. So I'm guessing between 65 to 70 billion is probably where their revenue is going to stay stagnant for an extended period of time, unless if we get some sort of update where that changes. But I tend to believe that it's probably going to be between 65 to 70 billion. That's about what the revenue is going to be for an extended period of time. I think that's what I'm going to use in these projections, just to give everybody a heads up. And so if we go through another market crash, are there going to be new leaders that lead the way out? And I think the answer is yes. I would not be surprised if semiconductors tend to be one of those leaders, not in the next 2 to 3 years, but I'm talking about the next 5 to 10 years out. Are they going to be the new leaders in this market? And I think the opportunity is there for them when we think about everything we're doing. We're becoming more reliant on technology. We're talking about involving AI in our lives. Everything that we own has a chip in it, whether it's the light I'm using, whether the computer I'm using, the microphone right in front of me. So I think the opportunity for chips are going to be there the more technology evolves. And I think it's kind of underappreciated, undervalued type sector. And I think Intel has an opportunity to recapture some of that market share, but I'm going to run these numbers pretty conservative. So we look at value when we look at valuation on Intel, we obviously see it's trading for a massive discount compared to its peers, almost slashed in half, and even EV to EBITDA is pretty much cut in half here. I think the valuation makes sense with the fact that they're losing market share, they're spending on capex. There's a lot of questions. So therefore, when you get a lot of questions, you get a big discount, just like Meta, just like historically Disney, and now similar to what we're seeing with Intel. Also, the competition is heating up and they are losing market share. All right, guys. So with Intel, I want to point out one thing. Debt has grown from 26 billion a few years back to now 38 billion in debt. Cash flow has gone negative due to capex spending. We've seen them put a few million shares on the market when normally they are buying back shares. So I have questions with a lot of different things what Intel is doing. And I tend to believe that a $21 to $23 to maybe $24 price target makes a lot of sense. If you're more bullish on the stock, I think 24 makes a tremendous amount of sense. If you're more bearish, but you think they're going to keep their dividend and you think they're going to be able to get through these harder times, I would probably wait for about $20 or $21 a share, which I think is very doable for what's going on in the market. If we take a look at where Intel is trading right now, we're pretty much approaching that buy zone, another 10, 15% down here. Could absolutely bring a buying opportunity if you're more bullish on the stock. Hopefully everybody enjoyed that. Really appreciate how many people ask great questions, throwing phenomenal stocks out there. And I just kind of wanted to give a quick update on where all the stock analysis is, where all the stock prices are. And in fact, I do have to update the Intel one. I'm going to put a price target of $22 on Intel. So that way there we can keep track of when we're updating these. So I'll probably start doing that going forward, guys. Just kind of put a date in there and you all have access to this stuff. So hopefully everybody enjoys it. I do have to update a few different other ones here that I haven't gotten to their quarterly reports. It's just a lot of work to go through it, re-update everything. So I'm sure you guys understand. But as always, guys, really appreciate your time. Once again, I thought it was phenomenal how many good call outs there were. I think you're definitely giving me some work to do here. There was a couple other stocks that I want to hit on that were in that comment box. So I'll try to get to those when I can. But as always, guys, appreciate your time and we will see you in the next one. Peace.